Premium, the amount you pay to have insurance, like a subscription fee. You can pay monthly, quarterly, or yearly, and your coverage stays active as long as you pay. Deductible, the amount you pay out of pocket before your insurance starts paying. Higher deductible usually means lower premiums. Claim, a request you file with your insurer to get paid or reimbursed for a loss. Coverage, the protection or benefits provided by your insurance policy. Policy, the written contract that outlines what's covered, excluded, and how claims are handled. Liability, legal responsibility for damages or injuries to another person or property. Policyholder, the person or business that owns the insurance policy. Beneficiary, the person or entity who receives money from a life or annuity policy. Underwriting, the process insurers use to assess risk and determine your premium. Exclusion, situations or items that are not covered by your policy. Collision coverage, pays for damage to your car after an accident. Comprehensive coverage, covers damage to your car from things other than a crash, like theft, fire, vandalism, falling objects, or storms. Liability coverage, pays for others' injuries or property damage if you're at fault. Uninsured motorist coverage, helps pay your medical bills or car repairs if someone without insurance hits you. It fills the gap when the other driver can't pay. Underinsured motorist coverage, covers you when the driver who hits you has insurance, but not enough to pay for all the damage or medical bills. It makes up the difference. Personal injury protection, PIP, helps pay for medical bills, lost wages, and sometimes child care or funeral costs after a car accident, no matter who caused it. Gap insurance, pays the difference between your car's value and your loan balance if it's totaled. Comprehensive loss, underwriting exchange, or CLUE, a database insurers use to check your claim history. Actual cash value, or ACV, what your item is worth today after subtracting wear and tear, not the price you paid when it was new. Replacement cost value, or RCV, the amount it would cost to replace something with a brand new version at today's prices, without subtracting for age or wear. Copayment, or copay, a fixed amount you pay for a service, like $20 for a doctor visit. Insurance covers the rest. Coinsurance, the percentage of a bill you pay after meeting your deductible. For example, if it's 20%, you pay 20%, and insurance pays 80%. Out-of-pocket maximum, the most you'll pay in a year for covered expenses. After that, insurance pays 100%. Network A group of doctors, hospitals, and providers contracted with your insurer. Primary care physician, or PCP, your main doctor who handles general care and refers you to specialists if needed. Referral, when your primary doctor sends you to a specialist for further care. Pre-existing condition, a health issue that existed before your policy began. HMO, or Health Maintenance Organization, lower cost plan where you must use in-network doctors and get referrals for specialists, with a focus on preventive care. PPO, or Preferred Provider Organization, a flexible health plan that lets you see any doctor, in-network or out, without referrals, though in-network care costs less. EOB, or Explanation of Benefits, a statement from your insurance explaining what was covered, what you owe, and what insurance paid. Term life insurance, pays a set amount to your beneficiaries if you die during a specific period. It doesn't build cash value. Whole life insurance, covers you for your whole life and includes a cash value you can borrow against. Premiums are usually higher than term life. Universal life insurance, permanent life insurance with flexible premiums and death benefits. It also builds cash value that grows over time. Cash value, the savings component that builds inside certain life policies. Face value, death benefit, the amount paid to beneficiaries when the insured dies. Rider, an optional add-on that provides extra benefits, like accidental death or disability. Accelerated death benefit lets you access part of your life insurance payout early if you become seriously ill before you die. Conversion option allows you to change a term life policy into a permanent life policy without a medical exam. Beneficiary designation. The person or people officially named to receive your life insurance payout when you die. Contestability period. The time, usually 2 years, after a life insurance policy starts when the insurer can deny a claim for misstatements or errors on the application. Dwelling coverage. Protection for the physical structure of your home. Personal property coverage. Covers your belongings, like furniture, clothes, and electronics, if they're damaged, destroyed, or stolen. Loss of use. Covers extra living expenses if your home becomes uninhabitable due to a covered event, like fire or storm damage. Personal liability coverage. Protects you if someone is injured on your property. Medical payments coverage. Pays minor medical bills for guests injured on your property. Endorsement or rider. Add-on coverage for special items or risks. Jewelry, floods, earthquakes. Peril. The specific cause of loss or damage, like fire, theft, or a storm. Open peril policy. Covers all risks of loss, except those specifically excluded in the policy. Named peril policy. Covers only the perils listed in the policy. General liability insurance. Covers bodily injury or property damage claims against your business. Errors and omissions. Protects professionals if they make mistakes or give bad advice that causes a client to lose money. Product liability. Protects a business if a product they sell causes injury or damage to someone. Workers' compensation. Covers employee injuries that happen on the job. Business interruption insurance. Pays lost income if a business can't operate after a covered event. Commercial property insurance. Covers buildings, equipment, and inventory used for business. Umbrella policy. Extra liability protection beyond standard policy limits. Certificate of Insurance, or COI. Proof that a business has insurance coverage. Additional insured. A person or entity added to your policy for shared protection. Subrogation. The insurer's right to recover money from the at-fault party after paying your claim. Act of God. A natural event, like a storm or earthquake, outside human control. Aggregate limit. The most your policy will pay in total for all claims in a policy period. Claim adjuster. The person who investigates and settles your claim. Declarations. Page. The summary page listing key policy details like limits and premiums. Endowment policy. Life policy that pays after a fixed term or at death. Grace period. Extra time to pay your premium before your policy lapses. Lapse. When coverage ends because a premium wasn't paid. Reinstatement. Reactivating a lapsed policy. Moral hazard. When someone takes more risk because they're insured. Morbidity or mortality. Table. Actuarial tools that are used to calculate risk and premium rates. Per occurrence limit. The maximum amount an insurer pays per event. Reinsurance. Insurance that insurance companies buy to reduce their own risk. Salvage value. The remaining value of damaged property that the insurer may sell or recover. Waiting period or elimination period. Time before certain benefits kick in. Waiver of premium. Suspends your premium payments if you become disabled.